So 2,000, now it's around 2,700, give or take. It'll make its way to 3,000, eventually 4,000, and eventually much higher than that. Yeah, gold is going to get a lot stronger, and it's not like we're not going back to a gold standard or anything of the kind. But here's the thing: gold is being driven by factors that are bigger than Trump. Presidency is a big deal. Looks like the Republicans might have what we call a trifecta, where you get the White House, the Senate. The Republicans have the Senate. House is still close, but it looks like they'll get the House, maybe only by a few votes. That's the trifecta when you have the White House, the Senate, and the House of Representatives, and then that means treaties, tax reconciliation, Supreme Court appointments. There's a whole bunch of things that you can get done if you do that. And none of it's bad for gold, but it's not really pertinent. But gold is being driven by things that are bigger than Trump, bigger than the White House. Central bank buying, the BRICS, de-dollarization, the fact that the U.S. froze and is in the process of stealing $300 billion worth of Russian-owned U.S. Treasury securities that were lawfully acquired. If you're anybody, China, Saudi Arabia, Taiwan, Japan, anybody, you say, hey, the United States just stole, not froze, but stole $300 billion of Treasury securities. Why do I want to be in Treasuries? Well, you have to be in some because there aren't many good alternatives, but you're going to go to gold. So the gold is going to go higher. It's bigger than Trump is how I would put it. Well, it depends on the time horizon. So the immediate reaction to the Trump election was stocks took off, and with good reason. His economic policies, less regulation, drill baby drill, basically getting rid of wasteful investment in what I call the Green New Scam, which Donald Trump picked up on. We're very happy about that. But yeah, so he has a lot of things that are going to be very good for stocks. However, there's something bigger than Trump. There's something bigger than the electoral process, which is the economy itself. Economy kind of goes its own way. I mean, one analogy is, you're turning an aircraft carrier. I've been a pilot of a lot of boats, not an aircraft carrier, but you turn the wheel, nothing happens. It takes a while, and then eventually the boat turns around. So if you said a year to 3 years from now, would the economy be a lot stronger, a lot better, and will stocks be higher under Trump? The answer is yes. But for the next 6 to 9 months, we may have to get through a recession. The business cycle goes its own way, and there are a lot of signs of recession out there. So we may get off to a rough start, but same thing happened to Ronald Reagan in 1982. He had one of the worst recessions in U.S. history, but finished with very strong growth toward the end of his first term and into a second term. Gold is going to go much higher, and here's the reason. First of all, when people say gold goes higher, what they literally mean is the dollar price of gold is higher. So 2,000, now it's around 2,700, give or take. It'll make its way to 3,000, eventually 4,000, and eventually much higher than that. But what's really going on? It's not that gold's getting higher, it's that the dollar is collapsing in front of your eyes. Now, if you compare the dollar to other currencies, right now it's very strong. There's something called the dollar index, DXY. It's going up a lot. Dollar is stronger against the euro, Japanese yen, Chinese yuan. So currency to currency, the dollar is getting a lot stronger. But that's kind of irrelevant because they're all currencies. They're all central bank notes, as I just described. If you really want to understand what's going on with the dollar, look at the dollar price of gold. And when the dollar price of gold goes 2,000, 2,500, 3,000 or higher, which it is, what's really happening is you're watching your dollar evaporate. You're watching the dollar crash relative to a hard asset. So what's the case for gold going higher, even though I just described it as the dollar collapse? Central banks are net buyers. That had not been true for decades. Beginning in 2010, that term, but that's accelerating. Russia's buying. By the way, Russia has a particular reason for buying, which is the U.S. froze $300 billion worth of lawfully purchased Treasury notes that Russia owned in their reserve positions after the special military operation in Ukraine. We're now in the process, the Biden administration is in the process of stealing $50 billion of those assets to make another loan to Ukraine. So watching the U.S. freeze Treasury securities and then steal them, does it make you want to buy Treasury securities? No, it makes you want to buy gold. So Russia has quadrupled their reserves in the last 14 years. China, same thing, quadrupled their reserves. Japan, Kazakhstan, Vietnam, Mexico, Philippines, Turkey, Iran, even though Iran's not transparent, they're all buying gold. And part of it has to do with the BRICS. They don't have a new currency yet, but they're working on a new payment system. So gold is a way to settle up trade balances. But the main reason is people are looking for alternatives to the dollar. I'm not saying the dollar is going away. You can't get totally out of the dollar. It's too big for that. But at the margin, you can buy gold. So what that means for a retail investor or anybody else, you've got kind of a floor under it. You've got the central banks buying a quarter of annual output. So that's going to put a floor under it, and then you can kind of just go up from there. So those are my favorite kind of trades where they your downside's limited, but your upside's practically unlimited. Well, looking at the transition team, I think is doing a great job. I mean, we've got some big, Susie Wiles as chief of staff, Elise Stefanik as ambassador to the United Nations. By the way, I haven't heard any apologies from Mark Cuban. He says that Trump can't deal with strong, independent women. Well, his first two choices were strong, independent women. So
and he deleted all of his posts on X about Kamala Harris today, too.
Yeah, well, it's too bad. You can't delete the internet. We all know what he said. But Lee Zeldin for EPA, Steve Miller for, I think, maybe deputy chief of staff, but he's going to have a very broad portfolio. Tom Homan for, they haven't specifically said Customs and Border Patrol, but he'll be a czar. Very strong on deportation. And, you'll never, just as a practical matter, you'll never be able to deport 12 million people, but if you could deport the 2 million worst, the criminals in their home country, the criminals in the U.S., terrorist watch lists, and others, that would be a great start, and they're very determined to do that. So I think they're off to a good start. Having said that, what I'm watching is the resistance. I remember in 2016, right after the election, people were shocked. By the way, I predicted that Trump would win in 2016. I think there were 5 people who did that, but I was one of them. But they announced immediately we're the resistance, as if they were the French resistance risking their lives. They're basically just a bunch of paper pushers with social media accounts, but they're very powerful because they're entrenched in the bureaucracy. So we've seen 4 states already announced they're going to have special state laws. We've seen people basically forming informal groups to push back on Trump. So here's the question. The resistance is there. The transition team is off to a good start. But are they going to really clean the house? In 2017, Trump did not drain the swamp because he couldn't find the swamp. Now he knows where it is. It's in the Plum Book. That's the government printing office book that lists 8,000 jobs where the president can pick anyone he wants. He kind of not affected by civil service. Some require Senate confirmation, but they're the president's picks. I know I've been in touch with some transition people. They've done a much better job of identifying those. And at least so far, they're off to a great start. So I think Trump's going to prevail, but it's a very tough fight and the resistance is real. Well, it's funny. I've studied Bitcoin for a long time. I was in Bitcoin versus gold debates. Leave aside whether that's a sensible comparison, but I've been doing those since 2010. I read Nakamoto's paper in 2009. I understand the math. I understand everything about it. I make the point that the designers of it, Satoshi Nakamoto, whoever, were very good at applied mathematics and engineering. Didn't seem to know very much about money. So here's the thing with Bitcoin. It took me a long time to figure this out. It's like a casino chip. So you go into the casino, put your money on the roulette table. Croupier gives you chips. You bet them. You can win or lose. But whatever you have left at the end of the evening, you take them over to the cashier and you get cash and you leave. The problem is if you walked out of the casino with your chips, they wouldn't be worth anything. You couldn't buy a cup of coffee with them, and it's not really a form of money. So in the Bitcoin world, the price is at an all-time high. It's been up. It's crashed 80%. It's rallied multiples, several 100%. So that's all good. But it's really just a form of gambling. I don't really think of it as an investment. There's no use case for Bitcoin. Now, can you make money? Absolutely. And a lot of people have. So my attitude is I'm not a Bitcoin basher. I just say, hey, it's an old rock and roll song from the 50s. Shout, shout, knock yourself out. I mean, if you want to buy Bitcoin, knock yourself out, do it. But I don't really think of it as a form of money. There are a lot of technical reasons for that. There's no debt. Most money is debt. If you take a $20 bill out of your wallet and look at it, read the contract, it says Federal Reserve note. A note is a form of debt. It's a liability on the balance sheet of the Federal Reserve Bank. That's true of almost every form of money. It's usually somebody basically taking government debt and giving them something that they can spend. Bitcoin, there's no debt. There's no debt market. It won't serve as a reserve currency. So it's there. It's interesting. People like it, and people can make money at it. Could go higher, could crash, but I don't really think of it as a viable form of money. Well, thank you. One of the good things about predicting Trump was going to win is we were able to actually do some research and to our newsletter subscribers and others and interviews and shows like yours, tell people what the best trades were. In other words, what sectors were going to benefit from Trump. There's some that are going to be hurt. The Green New scam, windmill operators. We don't have to get on the list. Those are all going to be hurt. Trump's not bashing them. He's just saying we're not going to subsidize them. We're not going to put them at the front of the line anymore. You're on your own. Most of them are not economic. So we don't have to spend time on that. But there is a list of places you don't want to be. But on the positive side, here are the sectors. Because as I said, I did a big article on this a couple of days ago. Obviously, oil, natural gas drilling, production, and refining. And I like Marathon Oil because they're of course they're an exploring producing company along with ExxonMobil and Chevron, but Marathon has a big refining slice, and U.S. hasn't built a new refinery since the 1970s. So you're not only going to see pipelines and maybe finally get the Keystone XL pipeline done after all those delays, but you're going to see an expansion of refining capacity. So I like that. Mining for sure. As costs of production go down, as electricity prices go down, based on drill baby drill. If you produce more energy, you're going to have lower energy prices. But opening up leasing on federal lands, relaxing environmental permits. By the way, I have a certain amount of experience in the mining industry. I've never seen anyone who's more careful about the environment. I mean, they if you're using arsenic to get reduction to gold, for example, they cache it and they weigh it, and it's like you better account for every drop of arsenic. It's not like they're dumping this into the water, so it's not a threat to the environment. But they've been using the environment to stand in the way. That's going to change. Mining's going to expand. Canada, different set of rules, but the U.S., places like Nevada, which is Utah, which are kind of mining friendly, that's going to grow. And if you have an industrial expansion, what do you need? More copper, more lithium. Silver is an industrial metal. Defense and national security for sure. And it's not all about, RTX. It used to be Raytheon, Lockheed Martin, et cetera. Yeah, they're the biggies. But a company called Leidos, which has three verticals. It's defense, national security, and IT. I can't think of a better combination of things that are going to benefit under Trump. Automobile manufacturing, sorry China, sorry Mexico. Trump, and by the way, you have to know the people behind it. Robert Lighthizer, Peter Navarro. I mean, I know Peter personally. I've spoke to other Trump advisors. They're going to pound foreign imports of cars with tariffs. Like, yeah, I sound like Trump now, but like you've never seen. And Mexico is not going to get off the hook under it's the USMCA now, the updated version of NAFTA, but basically it allows Mexican cars into the U.S. without tariffs. But a lot of those Mexican car plants are owned by China. Trump's going to single them out, put huge tariffs on them. So what they're saying, they're not saying we're against foreign investment. They're saying you, China, Japan, Korea, whoever you are, you can sell cars in the United States, but you have to make them here. You're going to have to open plants. So that's going to be a big plus. Cryptocurrency, I'm not a fan, but markets are markets. Bitcoin's way up. Banking and finance, trucking and airlines. If you lower energy costs, which Trump will, then their margins will go up. So there are a lot of sectors that are going to benefit.
Summary. The most valuable investment opportunities are those that offer limited downside with unlimited upside potential. Rickards illustrates this principle through his analysis of gold, where he points out that central bank buying activity creates a natural price floor, effectively limiting the downside risk. When institutional buyers are consistently purchasing approximately 1/4 of annual output, it establishes a baseline of demand that helps protect against significant price drops while still allowing for substantial upward movement. This asymmetric risk-reward profile represents an ideal investment setup. Gold's trajectory is driven by structural forces that transcend political developments, making it a powerful long-term trend. Rickards emphasizes that gold's momentum is bigger than Trump or any single administration, driven instead by fundamental factors like central bank buying patterns, BRICS de-dollarization efforts, and declining trust in traditional reserve currencies. He specifically points to how the U.S. freezing and potentially seizing $300 billion in Russian Treasury securities has prompted many nations to reconsider their dollar holdings, pushing them toward gold as an alternative store of value. These structural shifts in the global monetary system suggest a sustained move toward gold that exists independent of political cycles. Understanding sector-specific policy impacts is crucial for investment success. Rickards outlines clear winners and losers based on anticipated policy changes, particularly in sectors like energy, mining, and manufacturing. He identifies opportunities in oil and natural gas drilling, mining operations for industrial metals like copper and lithium, defense contractors, and domestic automobile manufacturing. Conversely, he warns against sectors that might lose government support, such as renewable energy companies that have relied heavily on subsidies. This targeted approach to sector analysis, based on policy implications, provides a framework for identifying promising investment opportunities while avoiding sectors likely to face headwinds.